Yeah, hi, good evening, everyone. So it's really a pleasure to welcome you all, and it's a privilege to have a very diversified group. We have from FMCG, from medical technology, as well as beauty products, both from the Indian as well as the reputed international companies. So we will be handling three themes. So one is with regard to the boardroom leadership and decision making. Okay. So if we see, all of us know that the environment has been changing. There has been a geopolitical, transformational, as well as technological changes which are taking place. And the because of these changes, most of the companies, they are either facing or they are about to face the structural transformational curve, which means that they are at a transformational inflection point, which means that they are facing two challenges. One challenge is to perform by way of consolidating their business, and the second is transform at the same time through innovation and finding high growth areas. And if there is a mismatch between the perform and transform, that leads to crisis situation. And accordingly, the discussions in the boardroom also revolves around that. So my question to Svetlana is that as you plan for 2026, what role do you think finance leaders should play as a strategic co-pilot to CEOs and the board during the moment of crisis? Yeah.
Okay, am I audible? Yeah, good. Thank you. Thank you for the question. Look, let me travel a little bit back, maybe decade back, to think how the role of the CFO has changed since the years. And then I come to the crisis, because every day is a crisis, if you wish. I remember when I started my career in finance, and then when I evolved to the controlling and the CFO role. So our primarily responsibility was planning, reporting, accounting, tax, less advisory. So more like a backstage operations. And with the time, I would say decade, maybe a little bit more, we see how overall the finance director role evolved more to the business partner and the strategic partner. And respectively, when you are in the time of crisis, the role of CFO is particularly important in a sense that things as mastering the numbers, reporting, it's come as granted. What is important is the envision and the business insight that support and navigate the CEO at any time. And particularly it is required in the time of crisis. And we always say CEO and CFO is a pilot and co-pilot. Pilot and co-pilot sitting in the same plane. And if plane take off, running, or if plane is crashing, both are dead. So respectively, it is 100% shared responsibility to run operations and manage the crisis. I can give you one funny, but it was not funny when it happened. The case that happened to me, I was in Indonesia as a CFO of Nestle in Indonesia, and it was I was 6 months in the country, and then COVID happened, and then it's coincided with the CEO resigned. CEO resigned 1st February, and 1st March we closed the office. And the new CEO supposed to come from Vietnam, but everything was restricted, closed, so he could not travel. And then the whole company looked up at me. How I'm going to manage, how I'm going to manage the operations, the factories, the distributors, and daily operations. And I was shocked. They definitely didn't expect that. I didn't know country so well, but the whole organization was looking up at me because CEO was remote. And the CEO was not familiar, not privy to the operations. And I had to stretch myself. I gained a lot of wisdom along with the gray hair, obviously. So, but this is to demonstrate that CFO is number one in the crisis. If I come, maybe I have no time. Okay, I will.
No, yeah. No.
I told you 4 minutes.
Can complete whatever you want to.
No, just quickly to say in India, when year and a half ago, what happened, you all know there is I would not call it crisis, but it's consumption, particularly for the FMCG dropped because of the high inflation, and there was a huge stress and happened almost overnight. And there was a huge capex pipeline for planning to increase capacity for us. And then we had to react so fast. We have to stop capex. We have to preserve cash. We have to stop pushing the distribution system to not overstock. It was such a fast reaction, such a important assessment of the ecosystem, and this is where the finance team played a big role, not to be in the crisis, not to be in the deep crisis, if you wish.
No, very well said. So the message is that the CFO role has got changed from caution, which is protecting the value, to conviction, what you said, that in terms of preserving the cash, because conviction is something which creates the value for the organization. So building on that, moving on to the next stream is with regard to the financial resilience. So nowadays we see that the CFO is wearing multiple hats, such as the Chief Value Officer, Chief Future Officer, Chief Transformation Officer. But we would like to give one more title after listening to Svetlana, the Chief Crisis Officer. And we are living in the volatile world, and the CFO has to manage multiple stakeholders and have to navigate the organization through the crisis situation. So my question is to Anil, that basis your understanding, what crisis framework CFO shall ensure so that the cash flow stability and the cash preservation can be achieved without compromising on the growth of the company?
No, thanks for the question. So good evening, everyone. Pleased to be here. I think you mentioned about the different names being given to CFO. Just picking on what Svetlana mentioned about, the role of finance is not just about back end, it's getting into the front end. It's like, it's Chief Facilitating Officer, Chief Crisis Officer is what you added. And perhaps I'll add, it's also Chief Chaos Officer as well sometime, because we got to manage crisis and chaos. And every day can be a chaos and crisis as well. But the fact of the matter is, what's common in all these terminologies and why there is so much of reliance being stressed upon to the CFO is because we as CFO know situation leadership. And we need to demonstrate that to manage crisis, to manage chaos, to manage risk, and to capitalize opportunity. And the role of finance, as we were just hearing it from Svetlana, is all about creating those insights and foresight, which helps the organization to maximize on a possible opportunity coming in and to minimize the risk coming in. So what action needs to be done today to probably avoid that crisis or to maximize that opportunity is where the value creation from finance comes in. But coming to the point of crisis management, when we talk about the framework, I'll pick up on three themes, and probably it can be mindset as well, which can, I'm sure most of you in the room can resonate with that. The first one is liquidity first. When crisis struck, cash is anyway king, but cash become of utmost importance to the organization when there is crisis. And that's where, as CFO, we are the front runner, we are the torch bearer to give a clear indication to the organization that how cash flow position is. This is one of the important phenomena that during crisis, how do you manage your working capital? How do you minimize your DSOs, your inventory turnovers or inventory days, or you maximize your DPO to manage the overall cash cycle? One thing correlating to this, I would say, is it's a phenomena where when you respond to a crisis, one, you manage cash. Second one, it's a natural reaction to cut cost, and which is one of probably the most obvious reaction which comes across. But as CFOs, it is our responsibility to see that are we cutting cost, which is fat in the organization, or are we cutting bone, where we are depleting the capital, which is what we were discussing just a few minutes back. Now, the second thing which I would say is a mindset or a framework of reallocate. Whether it is capital, whether it is cash, whether it's resources, everything is limited. It's scarce. The fact of the matter which remains is that how can we have that approach where as CFO we drive that mindset as well as take actions to reallocate resources from low margin to high margin, low growth to high growth business. And that's where we create long-term value creation for the various stakeholders while preserving what we have today. And third, and perhaps the last thing which I would say on the framework part is, at the end of the day, during crisis, when CFO has to lead, cash optimization or cash generation, CFO has to lead, these strategic calls, act as a co-pilot to CEO and the board in advising all that stuff. Important element is to have that communication as well. A transparent communication stating the way we are as an organization and what are the actions which we are doing to kind of like prevent that to get further bad, or also what are the actions being taken to bring situation back. So all in all, I think it's a very important element which CFOs plays during crisis to preserve short-term and the long-term need of the organization, either through liquidity management, cash management, cutting cost, but reallocating resources. I think all this stuff, I'll conclude my thought with the fact that, preserving capital during crisis or cutting cost is not about being anti-growth. It's about making sure that for today, we are doing enough action that organization can sustain, survive, while we are preserving the long-term value and the strategic growth which organization expects for future.
Very well said. You have answered almost all the questions which were there on the list. No, so the key takeaway is that, that's a very valid point, that it's not about the cost cutting or the cost reduction. It's about cost reduction without losing the competitiveness. So that's very important, that the fat should go away, but the bone should not get impacted. Very well articulated. And then on the role of CFO is also evolving, as you said, that from protecting the value to liberating the value, and then to creating the value, and more importantly, communicating the value. So these are some of the key takeaways from this thing. And the liquidity is also very important, because unless the short term is viable, long term cannot be viable. So very well said. So moving on to the next theme, which is about the decision making. So what truly shapes decision making over a period of time is the data. Data is the foundation for any decision making, but the data without context doesn't make sense. So data can only tell you what, but why is something that the distance between what and why needs to be bridged either through experience or through intuition. And then more importantly, what next? What's the action which is required to be taken out of that? So in today's uncertain decision-making uncertain scenario, decision-making is becoming very difficult, especially when the assumptions are not sacrosanct. So my question is to you, Siddhartha, basis your experience, how finance leaders can drive data-backed decisions quickly when the market conditions are uncertain and the assumptions are breaking down?
Thank you. Thank you for the question, and thanks for getting me here. So very quickly, I think I'll just want to touch upon 2 points which Anil and Svetlana picked up. So apart from being the chief crisis officer, chief cash officer, chief financial officer, I think it's also the chief data officer. And with that also, I think, I'm not sure how many of you have heard the term OVOT, which is one version of truth. And typically in organizations, when you get into and you are sitting in review meetings and you hear different set of data being presented out, and different teams have different versions of that truth or that data per se. It's important that CFOs bring their own understanding, their skills to ensure that the organization is talking one set of, let's say, numbers, A, so that the effective decision making can happen. That's one part of it. Second, I think I just want to pick on something which Svetlana picked up, which is pilot and co-pilot. Now, someone can also end up saying, what does really a co-pilot do? Is he just there as a backup in case the pilot fails? Or is he really acting value or adding value to the organization or to the way the function is? Now, effectively, the whole role of the co-pilot is to nudge the pilot, who's in turn the CEO, to ensure that he picks up the right kind of decisions. Most of us would have worked for really, really aggressive CEOs who come from typical sales and marketing backgrounds where optimism is the key. I will do this and I will get this growth. I will do this and this growth is going to come in. It's kind of really sitting on the table. But effectively, it's the CFOs who really come in and use either past experiences, past data sets, and their own understanding of the way the business is to ensure that whatever decisions are being picked up is picked up in turn what is effectively right for the organization. And it's not just about the information or the data, but it's about how that gets used by the CFO in terms of nudging and molding the organization in the right direction. A couple of things I just wanted to touch upon, various different facts, part of my journey. So effectively, I was in Airtel for some time. There, at one point of time, I'm sure you would have heard, we had launched something like an ISD packs, an STD packs. Now, these were again very, very focused towards individuals who were calling long distance. How did that come into play? Data mining. I'm not going to use the word AI. AI was not there at that point. But effectively, we used to understand this person calls up between 9 to 11, 40 minutes a day, whatever. And then you say, if I was to give him this kind of a pack, it becomes far more useful. Even today, I'm sure a lot of us realizes or do not realize, but the online advertising that's happening, that's all very targeted. Previous session, I heard Hemant talking about the AI and the fact that, the device is listening. Effectively, the ads get designed or kind of gets played to you based on what your interest area is. So that's all about data. Again, how do you use the data is all available. There's a lot of tech involved. There's a lot of science involved around it. But it's also how the CFOs or even, let's say, the decision makers in the organizations are able to bring it up to the forum to get it used far more effectively. And I think that's really the role what the CFO really plays, where he is able to nudge the organization in that direction to ensure effective decision makings can happen.
No, very well said. The data is important, data is there, but one has to go beyond the data because data is not going to give you what the customer signals are, what the market signals are, what the cultural signals are. So one has to go beyond the data to really interpret and draw a meaningful essence from the data. Yeah. Okay. So now it's a common question to all of you. So that's basically the long-term versus short-term. If we look at the business, the building brands is a decade-long process. Setting up a factory is a decade-long process, and the whatever we do in the business, it has a long-term conviction. But at the same time, as a CFO, we have to deliver results on a quarterly basis. And then each quarter we have our performance is tested. So would like to know your views on this, that how do you finance leader balance short-term survival with long-term value creation during disruptions? To you, Svetlana.
2 minutes per person, right?
Yeah, 2 minutes per person.
Okay. Look, in a moment of crisis and even in the normal operation, so important to focus on core. And particularly in the period of crisis, to protect the core, protect the continuity of the operation. As you rightly said, the cash flow, cash is a king. So definitely in the moment of crisis, continuity of operation and preserve the cash. Balance between the long term and short term, it's very difficult question to answer. It's very particular to the particular period in the organization and the particular crisis, but there is no either or. We're end company, so we have to ensure that we have continuity today and balance the going forward. And sometimes between the short term to long term, you need to explain, especially if you're a listed organization, you need to explain to the board, you need to explain to the investors that in the short term you compromise certain parameters, but you do it for the better future and for the long term investments and security. Transparency in this case is very important to ensure that all the data speaks for you. all the facts you put on the table in the boardroom, and then you provide enough transparency to the board and enough transparency to investors on what and why you are doing and what period you are going to compromise certain parameters. This is
No, absolutely. Still, CFOs have to struggle a lot between making decision that whether to invest in marketing or R&D. Similarly, whether to give dividend or to make an investment or to allocate funds to capex. So your views, Anil, on this?
Yeah, no, I think beside what I mentioned earlier and also what Svetlana mentioned, I'll add to that only. One point which is there is the definition of short-term and long-term during crisis change. Because it's in a war zone, your things are not defined by a normal standard, it changes. And accordingly the response and accordingly what does it mean for short-term and long-term changes as well. One thing which I personally feel and having spent a couple of decades in the industry is the scenario planning is where the key lies for managing short-term and long-term. Because, as finance, as CFOs, we have an ability to see things very comprehensively. We know how to connect the dots and how some of the implications are going to come in. Obviously, it's a dynamic model, but how do you put those data or information into numbers, calculate the scenarios, best case, worst case, keep evolving on that, and accordingly, organization taking response towards those scenarios, I think is a great tool to look into how things can be managed from a short-term perspective, which is all about sustaining, which is all about surviving, and from a long-term perspective, which is all about protecting the growth which is required for the organization. So I think I'll add to what's being said so far. Scenario planning is going to be an important tool, which we use it very often. How AI, I think just correlating to the fact which the earlier panelists were talking about, how AI is going to enable us, I think that's enabling today. But as the time comes, that's going to be a further addition towards that stuff. So yeah, that's what we're done.
Well said. Yeah, Siddhartha.
Right. So I think very, very simply put, let me talk about myself first. When I walk into a board meeting at the end of a quarter, it's not just about the quarter results that I'm really talking about, but prior to that, I've already worked out what the next quarter or the next year is going to be. I'll not say the full year, but at least how the full year for the current fiscal is happening. So it just kind of gets into a short term versus, let's say, medium term. But the fact is the CFO is not really thinking of today. Very, very easy for at times to build up or to buy sales. So when you look at the organizations, it's so easy. But then when you start thinking that today's sale, what happens in 3 months' time after the fiscal, what has happened? Very classic example, one of the companies which got listed very recently, I'm not going to use the name, but they had built up extremely high stocks into the general trade, and they ended up picking up about 100 crores worth of stock back from the market. What did they do? To ensure that the valuations at the IPO stage was probably at a high, they ended up doing a short-term activity, but with the long-term detrimental stuff from their perspective. But then most of the times I've seen CFOs being that watch gate to ensure that these kind of activities do not happen. They are thinking long-term. They try to look at systems, policies, processes to ensure long-term wealth creation is there. And not just about today. It's more about how do you build for tomorrow than for today. I think with the time's up, leave it.
Very well said. The long term is nothing, just the series of short term. That's one key takeaway. And for the short term, it is important to preserve cash, the liquidity. At the same time, keeping some reserve for the future, for the long term perspective. So these are some of the key takeaways. And the screen is showing time up for last 6 minutes. So we have exceeded our time. Sorry for that. Yeah. Any questions, anything we will be happy to take, or we can. Crystal clear. Yeah. Everyone wants to. Okay, thank you. Thanks everyone for the kind attention.